In this video, I will be talking about the infinite banking concept. I am not a financial advisor, nor am I an insurance agent. This video is not advice to open an insurance policy. My knowledge on the infinite banking concept is limited to my own studies on it, and the laws around insurance policies can change at any time. This video is simply my account on what I've done in my personal life around the infinite banking concept. Now that I had my broker account open, I was continuing to learn about money and finance. I read Robert Kiyosaki's second book, The Cash Flow Quadrant. This book personally helped me to understand how taxes and interest kills the Commonwealth building. After this book and my newfound knowledge on taxes and interest, I was searching for a way to grow my wealth in a tax-free way. This is when I revisited the infinite banking concept. I read Nelson Nash's book, Becoming Your Own Banker. During this time of my studies, my mind was eager to learn, but skepticism always followed me. At the time, I was learning about the infinite banking concept. There did not seem to be a lot of information on it. I spent countless hours calling local insurance companies, and no one seemed to know what I was talking about. That is when I came across IBC Global and their wealth of knowledge on the subject. Almost all that I currently know about the concept came from IBC Global. It has been a while since I opened my policy, but I will try and recall the steps and the processes I had to go through to open the account. Not really knowing much about the policy or how all of this worked at first, I just Googled life insurance companies. I started calling different companies, and eventually I did find a local company that knew about the infinite banking concept. But the way he talked about it, something seemed off to me. So I kept doing research, and eventually I found the guys at IBC Global. They were basically saved me from all of this. Through their website, I asked for information. Under the options there, I was just researching, and that started a whole email chain back and forth. And when I said I had found someone local at first, he seemed to get irritated the more questions I asked, and that made me a little bit nervous on this infinite banking concept. Once I found Steve and his team at IBC Global, I started emailing questions back and forth, and no matter how many questions I had, they seemed to continue to answer my questions. So the process on basically what happened was, once I filled this out, and once I didn't even say I wanted a policy or anything at first. It was just a multitude of questions. But once I finally was ready, they presented me basically a layout that showed exactly how the policy worked. And this isn't my actual policy, this is just an example, but it basically broke it down by age and showed exactly how much I was going to have in the policy as I went throughout the years. And there was a lot to learn with this. This was a basic breakdown that really started to help me understand and tell me when I was going to break even and things like that. But there's also, I had to learn about borrowing from the policy and doing other things like that. So just a constant, even after I received my actual policy, I still had questions. And even to this day, I still call and talk to them from time to time when I have questions. So after the first thing I had to do, after I went back and forth, and I wore those guys out, I kept asking questions, and I was just amazed how transparent they were in the fact that they would keep answering my questions. So once I felt comfortable, and again, if what led me to this point and what led me knowing that I needed this policy was Robert Kiyosaki's second book, The Cash Flow Quadrant. I can't stress enough how much these books helped me. I could not be able to do what I did without having all the knowledge from all those books. Again, like when I first started all of this, I had a weak mindset, and it was more of an ignorance than anything, because I grew up a certain way and I was basically hoarding money. I was just saving it. If you know the story about the talents, the one guy that went and buried his in the ground, that's who I was. I buried it, and I didn't let my money work for me. And without the knowledge from these books, there's no way I could have done what I did. And so I knew I needed the policy. After I accepted the policy, the next step was medical. And, the infinite banking concept, it's the foundation. It's literally, if this whole Chatman's bow was a house, it would be built, depending on what it's built upon, right? Your foundation. If you build a house upon a sand, it'll collapse. But if you build a house on rock, it holds still. And that's what this was. It was the foundation of all of this. Even with the broker accounts, all of the tax savings accounts, without this policy, I wouldn't have done what I did. This was basically the rock of all that I did. So the second part was I had to go through medical, and this policy, Nelson Nash's vision of the infinite banking concept, is built around a life insurance policy. And life insurance policies, their obligation is the death benefit that they have to pay out. So they know what they're doing. They've been doing this for hundreds of years from my research. And you have to get a medical, and you have to be approved for a policy. You can be denied if you're not in great health. But from my research, I've helped a few family members who would not qualify themselves to get approved. They were able to get approved through their kids. So they have a policy like on their sons or daughters, and that death benefit would apply to them, but it's the parent's policy. They have full control over it, and they can do whatever they need to do. So medical was the first thing. And when I was learning about this, even when I was presented that little schedule on how life insurance was going to work, one thing which whether they failed to mention or just didn't really think about it, was there's certain levels depending on your health and all the results that come back from medical. Your insurance may cost a little more. Well, it doesn't really cost anymore. You choose how much you want to pay, but the break-even year may take longer depending on your medical status. For the medical part, it was really easy. I had the option of going into like a clinic, or a nurse would come to the house on my schedule. I told them when I would be there, and that's what I chose. She came over. It was pretty easy. I had to do like bend over, touch her toes, couple of knee raises. It was pretty easy. Didn't take very long at all. The whole thing took, I think, 15 to 20 minutes. They did ask a lot of questions. They asked questions. I want to say they asked me questions on the phone, and then when the nurse got there, they kind of re-asked the questions, and it goes a little bit into your family history. Your parents or grandparents, was there any heart attacks or strokes or medical history? So that took about maybe 70%. The other 30% was basically just, I think we jumped up and down. I think she measured my waist, but it was pretty quick. It didn't take very long at all. And I think they drew blood, maybe 2 vials. But other than that, that was pretty much it. I remember being a little nervous about the medical, but it was really simple. It didn't take that long. Once medical was approved, and I remember I was just waiting. I just wanted the account because I was so excited about it. And I want to say it took 2 or 3 weeks. It could have been a month, but it took a little while before they finally got back to me. And once they got back, now the only thing was I needed to pay the premium. So once I paid the premium, and on the premium, they say that you basically are allowed to 10x your premium. So if you say you want to put 10,000 into a policy, and you're allowed to put 10 times your premium. So say like you wanted 10,000 to be able to put in the policy, your premium will be 1,000. 1,000 times 10 equals 10,000. One thing I learned about the infinite banking concept, the policy and all of that, I understood what I wanted. I understood that I needed this account and that this was going to be basically a holding account as well as the foundation and what will be passed down onto my future generations. That all this stuff, it was hard at the time learning it because I didn't have any much references. I was just going by what I can find here and there and trying to piece it together. Well, yes, you can put 10 times your premium into the policy, but the premium wasn't $1,000. In order to do that, you had to increase the death benefit. There's laws and things around this, and this is I couldn't even explain it in a video. You have to do your own research, but basically you have to attach a term rider to this, and that term rider costs some money. So the premium ended up being like $1,400, and this wasn't my premium. This is just an example. I'm just saying the premium would have, I don't know, it was kind of like $100. I couldn't really figure it out. I tried to do all of this after I got this open, after the year passed, and trying to figure out, I'm kind of analytical, and I wanted to figure out exactly how the policy worked. Well, it's hard to figure out, and all of this stuff, just know that the premium is going to be higher than, it's not so cut and dry as 10 times your premium is what you're allowed to put in. You are allowed to put that in there, but your premium is going to be a little bit more once they attach the rider onto it. So if I would have known this at a time, I would have asked, how much does the rider cost? And is the premium exactly $1,000? But other than that, it didn't bother me. Once I understood how it worked, I was fine with it, and I wanted the policy. So once I paid the policy, I think it took 2 or 3 days. It didn't take that long once I actually paid the premium. Once I paid the premium, I was able to log in. I did choose Guardian as the insurance company. Again, that gets into a whole nother thing. There's direct, non-direct recognition. There's different rules, policies. There's different things. Each insurance company has their own rules, and then each insurance company, the laws change within those companies. So again, at the time I did it, all the research I did, Guardian was the one I chose. So once I did that, I was able to log in to Guardian. So once you pay your premium, then you basically, it's kind of like, okay, I have the checking account now. I can basically now start using it. So I had already had my broker account. When I learned about calls and puts, I had dumped all of my money into the broker account, and I was doing cover calls and cover puts, and it was generating some money. Then as I learned about the infinite banking concept, I opened this insurance policy. Once the policy was opened and all set up, I took from my broker account, I took all of that money and I put it into the life insurance policy to beef up the cash value in the policy. See, once that cash value was beefed up, you can take from your policy a loan and you'll still get dividends and interest on that account as if you never took it out. So the idea was to take that bulk of money and put into the PUA, the paid up additions, to beef up the cash value, and then to borrow it back out and put it back in the broker account. And the reason I wanted to do that was because I wanted to maximize, that chart that showed that I was going to break even in a certain year. That was based off of the policy being max funded. And the way, I had to do a lot more research on this too, But basically, when I took a loan, as long as I paid the loan back, it all still equaled the same regardless of how much I took out. And as far as borrowing from the policy, once I borrowed a chunk, I had to pay it back. When I paid it back, I had to pay it back with interest. That interest went to the insurance company, but they were still paying me dividends and interest. So technically it came out to like a 0% loan. So once I've put that in here and I've had that all that amount in here maxed out, I then turned around, borrowed from it, and put it back in the broker account. Then the calls and the puts that this account was producing, I turned around and paid this loan back with it. That process repeated itself over and over for a while. It may have been like a year or so, but I just kept doing puts and calls and paying back the policy loan. Once the policy was paid back, I could then turn around and do it again. At that point is when I started to look more into the Roth IRA. In the next video, I will go over the Roth IRA.